With the Trump tariffs kicking in, we're going to calculate and see what is the right price to buy Caterpillar so we can get a 2x return from the S&P 500 by 2030. Now, Caterpillar in its current state is not a good stock to buy. It is expected to underperform the S&P 500. But with the Trump tariffs, it is expected to have a major consolidation. We're going to see what is the price that we can enter where we have the most potential to have a 2x return. But before we get started, please subscribe and like, and let's get started with the analysis. These are the current metrics of Caterpillar. For us to get an estimate what the stock price could be over the next 5 years, we need to make an analysis of what these metrics will be from 5 years from now. So let's get started with the revenue. Its revenue over the last 12 months has been $65.6 billion. But when you go down to its revenue history, in 2012, it reached $67 billion in revenue. Ever since then, it's never able to reach that metric again. It has these flows where it goes up and then it comes right back down. It goes up, it comes right back down. So from this analysis, we can predict that its ceiling at the very best will be a minor seasonal jump of 10 to 20%, no more. And if you take a look down here, this thesis kind of illustrates exactly what the revenue is showing. It has these moments of revenue increases, then a moment of revenue declines, and then a moment of revenue increases, and again a moment of revenue decline. Now that we have a rough picture of what the revenue should or could be by 2030, let's see what LLMs thinks that its revenue will be by 2030 or 5 years from now. Well, first is ChatGPT, and it believes its revenue by 2029 could be $72.5 billion. Now, I'll be honest, this is a bit reasonable, especially the amount of inflation we've been getting recently, and that doesn't seem to be slowing down. So I think this is a reasonable number, but I still think it's a bit too high. So let's see what other LLMs. Gemini thinks $77.3 billion. That's not possible. That's a bit too high for my liking. So we're going to ignore that metric and see what DeepSeek thinks. DeepSeek is saying about $78 billion by 2028. So it's even more aggressive with its revenue projection than what Gemini was. Claude is saying about $101 billion by 2029. So guys, I have to be transparent and honest. I don't like any of the other LLM's numbers. I like ChatGPT's because the revenue has been in this flow of increase, decrease, increase, decrease. I don't think it's going to hit 77, 80, 100 billion. I think all those hypotheses that the other LLMs are making are a bit too aggressive. Because of that, I'm going to say it's going to have an increase of 10%, which is $72 billion over the next 5 years. I just can't comprehend that this company, especially from the historical patterns, that it's going to reach 80, 90, 100 billion. Could it? It can, but I don't think it will. Next, we're going to take a look at number of outstanding shares. It's been able to decrease its number of outstanding shares by 5% over the last 12 months. Now, if we take a look at historical figures, it's been able to consistently decrease the number of outstanding shares by 3% every year if you take a look at down here. So with that observation, I think it can decrease its number of outstanding shares by 15% over the next 5 years. So I'm going with 15%. Its current margin of profit is about 16.2%. And if you go down here, it's been able to increase its margin of profit by 1% on average every year. In my personal opinion, I think this is going to plateau around the 18 mark. So I'm going to go with 18 as its profit margin. As far as PE goes, I think its PE is going to go down slightly from 16.5 today to 15, just because I think it's going to have more competition and it's going to have to play with smaller margins. Now, with all the figures analyzed, we get an intrinsic value of $471. If you were to invest that same money into the S&P 500 over the next 5 years, you would get $556. Now, remember what I told you guys. We're trying to find the price to enter when the tariff sentiment hits with Trump. So for us to get a 2x return, we need to buy this stock at $235. Now, you might think a 40% drop in the stock price is highly unlikely, But let me show you guys something. I asked DeepSeek how many times did the stock fall below 10% over the last 20 years. And Caterpillar has had more than 30% drops 5 times over the last 5 years. First in 2008, then in 2012, then in 2016, then 2018, 2020, and the most latest being 2022. The point I'm trying to make here is that we need to be a little bit patient with this stock, and I believe it will have a consolidation of below 300. Will it reach the intrinsic value of $235? I think it can, but there's a higher chance that it might not. I just want to be honest and transparent. So with that being calculated, I would wait until this stock hits below 300, which is going. Once the tariff fear kicks into the market, you will see this stock plummet below 300. That's when I think it's the time to enter, and then wait until it reaches below 250 to really enter a solid position that can give us an adequate return over the next 5. But as always, please like, follow, and subscribe, and please consider hitting that bell icon to stay updated with the latest video drops.